How to find profitable commercial properties in less than 60 seconds. If you're looking to get started in commercial property and you want to find the properties that are 30 or 40% discounted to the market with built-in equity and zero risk, you are in the right place. Let me demonstrate to you in real time how this works. So here I am logged in to InvestFusion, but if you're here for the first time, you want to go to investfusion.co, make sure to register, and then you'll gain access to the dashboard. Now, the very first thing I want to do, basically because I already have a property I'm having in mind, I've been looking at this property for some time. So I'm going to go in here and type this property, and then I will basically do a search, do the property analysis once I enter this information. So give me a minute, I'll pause this video and enter in the full information on this property. So after entering this, the property report, all you have to do is to click Analyze Property, and in just a few minutes, it's going to come up with the output, and you have the data. So right now, it's fetching all the data, analyzing the property data for you, and it just takes a few minutes to do this. So when you click on Analyze Property, what InvestFusion does is it goes through a painstaking over 32 critical checkpoints. In fact, over 32 critical checkpoints or layers of data-driven checks to save you time, to save you money, months of guesswork. This is months of work that will take you time, energy, and sweat to do, all within a click of your button. And here you go. You can see right now it has given you access to this data. So let's start step by step and analyze the data it gives to you within just a click, within the access you have right now at the tip of your hands just by clicking this analyze property. So first of all, it gives you the financial matrix. As you can see, first is the price per square foot, which is $106 $106.96. Now, it did what they call a market comparison, meaning while it's running those checks, it's checking across the entire market in that region to see what the other properties price per foot are going for, to give you a summary or a breakdown of what your price per foot will be. So the market price per foot is about $335.54, meaning you have um, an NOI of $263,253. Now, the property price is about $2,995,000, almost $3 million, and the cap rate is 8.79%. Now, looking at these numbers between 106.96 and the market price per square foot, we're looking at over 68% equity or 68% discounted to the market. That is amazing, guys. Just alone having this access is amazing. But let's see how it explains this in further. Now, it did all of the tenants and give you a tenant count. That means how many tenants are found in the property. So the tenant information looks at all the numbers. Is there any single tenant? It says no. The occupancy rate is 100%, meaning that the shopping mall is fully listed. Is there any early termination rights? It says no. So what is early termination rights? Usually early termination rights are rights given to like, for example, government tenants. The right means that they have the obligation, which is signed in the lease, for them to get up and move out of your property at any point in time. Usually it's occupied, but that is done by government tenants. And you as an owner don't want to have a property where you have tenants with early termination rights. Now, it goes a step further. It lists all the tenants in that property. So you see Elegant Clothing, Lovely Queen, Restaurant, Liberty Tax, all the tenants. There are 18 of those tenants that are listed. McDonald's is there as well. Pretty sound African markets. Taylor and You, Metro PCS, Starbucks is also one of the tenants in that property. And again, this property is going for about 3 million, almost 299 $2,995,000. And again, the NOI is 263,253. Now, it goes a step further and gives you location and demographics. The household income is 86,632. What this means, guys, is simple. It means people within that region, or those who live in that region or that location, they have a disposable income, or they have a household income that is above the US average, meaning your tenants are likely able to pay rents. Your ability to sell will be higher. So it's a lot of good benefits. And that's why it's among the matrix, or the over 32 touch points, or critical checkpoints it does when it runs analysis for you. It gives you also the high visibility score. It says it's a yes. Then the population. It says the population within a 1 mile radius is 12,374. That's amazing, guys. This is just unbelievable that you, with a click of a button, you get all of this information. Now, touch points is the risk assessment. Again, this is extremely important. Why is this important? If everything else you don't understand, this is the most important point you want to get from your analysis. Why? It will save you thousands of dollars upfront. Fees like due diligence fees, the minimum you pay for a due diligence fee starts from $4,500 to over $10,000, from multifamily properties to over commercial properties. So imagine a tool like this that upfront is going to save you over $10,000 on due diligence fee. Would you take it serious? That's the reality on the ground. This saves you money, this saves you heartache, this saves you pain. This saves you also risking your EMD, your earnest money deposit, which is another extra $5,000 to $10,000 on top of your due diligence fee. Not adding your inspection report and your appraisal report. This alone is gold mine. This is what sets InvestFusion light years apart from everything else out there. This gives you an unfair advantage. There is no tool out there. This is not a regular listing service like your Zillow, your LoopNet, your Crexi. This is light years ahead of everything out there in the market. This is the only tool that gives you access to a risk assessment score. Why? So look at what it did here right now. It looked at the environmental condition of this property. It said good conditions. Is this property on a land lease? It says no. Property damage? No. Foundation issues? No. Property violations or zoning violations? It says no. So right off the bat, you know for a fact that the condition of this property, or the BTI, the big ticket items that you will spend money on, like foggy windows, is already removed off the bat. Okay. Now, basically, now let's see. Go. So again, InvestFusion does something very, very powerful. It goes and tracks the tenant's financial history. It actually, guys, it's actually among its touch points, analyze the property, each tenant's financial history. So you don't have to do all of those hard work yourself. It saves you months of hard work. So right here, it gives you this. It gives you also how much occupancy a tenant occupies in the property. So here you have the first tenant, elegant clothing. It says not profitable. Annual revenue, occupancy, it says 3.46%, which is great. So there's no, basically, it didn't give us any data on the revenue. Now for Lovely Queen, the occupancy is 6.33%. Again, it puts the word not profitable. For the restaurant, it says 6.44%. That's the occupancy. For Liberty Tax, it's 4%. For Envious Express, it's about 6.39%. For Executive Suites, it's about 9.99%. And for Tattoo, it's about 5.55%. Now, for Target, it says Target is profitable. Guys, this is amazing. Just look at this. It breaks down Target's annual revenue, and it gives us the 2022 revenue for 106.01 million, 2023 for 109, 2024 for 107, and then the TTM for 106.57, and gives it a green check for being profitable for targets. So you know one of the tenants that is very profitable. For Dominic Nazra, occupancy is about 6.48%. For McDonald's, it says it's profitable. It gives you the breakdown, the annual revenue. For 2021 revenue for 23 million, 2022 is 23 million point 18. 2023 is 25.5 million, and 2024 is 25.92, while the TTM is about 25.92 million. So it gives you that McDonald's is profitable. Now, for beauty supply, it says occupancy is 28.13%. Again, it didn't give us the value for its numbers. For the African market, it says it's 11.83% occupancy rate. For Lac Michura, La Michoacana is about 5.77%, and Taylor and Hughes about 2.66%. For Metro PCS, it says profitable. So it did a breakdown analysis of Metro PCS financial data. Same thing with Starbucks. Starbucks profitable. You can see Starbucks 29 million, and the overall TTM for Starbucks is about 36.15 million. And the Dexter Yens is about 2.96%. Just I want you guys to digest this a little bit. I understand what means. This means within a click of a button, in 1 second, you will understand all the tenants that are occupying a property you're looking at potentially buying for your commercial property. Number two, you will know the financial health or the health history of those tenants. How profitable have they been over the last 5 years? This is hard work data done for you at the tip of your fingertips. Number three, you will know their occupancy rate. You will know where your risk lies the most. Again, if you are dealing with a property that a tenant occupies more than 50% or even 60% or even 80%, it's a huge red flag. Why? Because if that tenant gets up and leaves, you are exposed to the downside. And so InvestFusion flags all of this and gives you access. Now, to take it a step further, you want to see what does InvestFusion tell you as a summary. To get that summary, to give you its overall recommendation, you will go back, you will go all the way down and you will click analyze or get AI investment analysis. So it has done now on its own, it has done its own due diligence for you. This takes me months of data collation, data finding, sleepless nights. AI investment analysis. Basically, this gives you a summary or its own recommendation what it thinks this property based on its over 32 plus critical touch points. This is his own recommendation. So the summary says investment criteria summary. So despite meeting many of the criteria, the over concentration of a single tenant, which is about a tenant had about 28%, and lack of positive age receivables are concerning. Consider these factors before making a decision to buy. Remember that we had one tenant that had about 28.13%. That is a critical level because for us, our benchmark is anywhere from 15 to 20%. So we had a tenant that occupied over 28%, and that is one of the red flag is flagging. So let's look at the summary. Price per foot should be 30 to 40% below market. They say the price per foot is $106.9, which is approximately 68% below the market price of 335.54. Guys, this is amazing. That means within just one click, you are able to find a commercial property that is 68% below the market, not 50%, not 20%, 68% below the market. Amazing, guys. And this will take you months of hard work, time, efforts spent researching this. With just a click of a button, you have access to this. Second analysis here is the cap rate. It says the cap rate is about 8.79%, which is above the 8% threshold. And that is amazing as well. Now, the property is not on a land lease because it identifies properties that are on a land lease and begins to avoid those properties. What else do we have here? Tenants with strong corporate financials. Now it says many tenants, such as Target, McDonald's, and others, have positive financials, but none specifically occupy 15 to 20% of the square footage, which makes sense. What it's saying is those tenants that have strong financials like Target, McDonald's, Starbucks, they do not occupy more than 15 or 20% of the property space. The only tenant that occupied more than 20% was the one whose financials could not be determined. And that's why it gave it a red mark. So you want to, this is why you use InvestFusion. When you see what is identified for you as an investor, your job now is, before going into that, that means before you pick up the phone to even begin to have any conversation with the seller, you already know what you're looking out for. It means if you decide to go ahead, the tenants who occupied more than 28%, you want to see their financial analysis. InvestFusion just expose you, giving you access, giving you an unfair advantage to where there could be a potential red flag. This is already saving you a ton of money and headache and time up front. If you don't get this, it's amazing. This is like a gold mine in your fingertips. What about age receivables? It says only a few tenants have positive age receivables, with the majority being negative, which makes sense. Now it says here, avoid properties where one tenant has more than 20%. So this was the property this was the tenants I was talking about. He said the beauty supply store occupies 28.13% of the property, exceeding the 20% limit. Now, that is one of the red flags you want to understand here. So if the beauty supply store has 28.13%, it's not extremely bad. Now, your job as an investor is to find out from the beauty supply store what has been. They need to provide you data of their financial reports. You also want to see their age receivables. The age receivables is the tenant's paying history. Your listing broker is not going to tell you or give you that. You have to ask. And that's why InvestFusion is telling you upfront as a buyer that this tenant is the tenant that can give you headache. This tenant is the tenant that can make you lose money. This tenant is the tenant that can make you lose your investment upfront before you pick up your phone or before you even leave your home to go and see that property. How insane is this, guys? How insane is this? So you already know where the red flag is. You know what to do. So it says here, of course, it gives you a green check mark. Avoid single tenant property. It said this property is not a single tenant property, having 18 tenants. It gave you all the tenants that are here. Avoid tenants with early termination rights. We don't have any tenants with early termination rights. Its further recommendation says make sure to have national tenants such as Target, McDonald's, Metro PCS, and Starbucks have shown positive sales figures. So you know your tenants are strong. You know you have strong paying tenants here. The financials looks good besides the beauty supply store. So that you have to validate because it was not available anywhere on the data. Location. The average household income is $86,632, which is above the US average. A lot of investors don't even have access to this knowledge. They don't understand this. The reason why this is so important is before you go and buy a property, the location has to be a cash flowing location. People with disposable income. Otherwise, they can't pay their rent. And those who live in that area will not be able to provide the income that your tenants' services require to fund their own needs. So there must be a check and balance. That's where this comes into play. So you want to have properties in location where the average is higher than the US national average. This is huge. Like literally, this is huge. For experienced investors who've been in this game for 20 years, they know what this means already to them. At the tip of their fingertips, this is huge. Now, property should be in a high, of course, so should be in a high visibility area, close to the roads. The property is in a high visibility area with a population of 12,374 within a 1 mile radius. Normally, I go for anywhere from 3,000 to 5,000 within a 1 mile radius. This property is located, one, high income area, two, population over 12,374. Some of you will be telling me, Jeff, you want to go and buy this property immediately because this is rare gem. Imagine this months of work, hard labor, all on your fingertips, and that's for just one property. Now, the occupancy rate is 100%, indicating that it's fully occupied. The property is not on a land lease, which is great. So you're not going to incur any hidden debt or fees. The financial reports are available for tenants like Target. So we have the report, which is great. There should be no record of debt in the property. There is no record of debt on this property. There are no foggy windows or dual panels reported, meaning you are not going to spend money on any big ticket items like foggy windows, are structural issues, foundation issues. That has been checked by InvestFusion. No major repairs are needed. Only cosmetic changes might be required. Listen, if you don't listen to anything else I've said, this alone, call your GC, call your general contractor, and find out what the repair costs have been. Costs have skyrocketed. With inflation high, interest rates high, costs have sky. So you don't want to go into a deal losing already. You're buying a landmine, and that's what InvestFusion. This is a rare gem. This is an unfair advantage. For those who don't have access to this, it's really an unfair advantage. Now, finally, there are no foundation issues reported, meaning it has no major foundation issues that has been reported. Guys, this is InvestFusion for you. It has done its analysis for you on this property within 3 seconds, giving you access to tools to access over 32 touch points that will take you months of hard work and pain to find out this information. So here you have it, and that is how InvestFusion gives you an unfair advantage over the others. So stop using those listing services that only list properties by their description. You want to go in and get the real meat in the bone of that property. Is it what you buying or selling? So even for beginners right now, you just cut through years, what it takes investors decades to begin to understand, not even master. And you've learned this in less than 3 seconds of just clicking the button, and then it provides you all of those data. All right. Thanks for watching. Until next time. Again, if you're watching this video, make sure to subscribe to our channel, hit the like button because more content like this will be revealed in the near future. Thanks for watching, guys.